Life moves fast, and so does your career. You've built a successful path, but now it's time to diversify your investments and secure your financial future. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you're time-starved with a family to care for and a demanding career to navigate. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. At The Prestige, we specialize in serving professionals like you who seek safe and secure investments without the burden of becoming an expert in commercial real estate. With over 400 years of combined experience, our team of seasoned experts is here to guide you towards high return, high yield investments in a low yield market. We meticulously analyze market trends, assess potential risks, and identify lucrative opportunities, ensuring your investment portfolio is optimized for growth and stability. Here's a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting, and love the floor plans. We've got our distribution pending in our bank account. Thank you so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't let time constraints hold you back from maximizing your investments. Visit The Prestige at mayhill.com today for our current and rare investment opportunity, and let us leverage our expertise to secure your future. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your partner in commercial real estate investing.
Hey everybody, thank you for your attention. I'm DL Campbell. I'm an engineer investor, and I have 20 years of commercial real estate experience. So this presentation is not going to have that crazy feel to it, okay? I have decades of engineering experience and then 20 years of commercial real estate experience as a developer. So why would you listen to me? I know that you guys have been sitting for a little while after lunch. This is a challenging time, but thank you for your attention. I do own 14 million assets under management. That's pretty good. 1 million square feet asset under management, and we're building a $220 million property, Class A luxury, in the heart of Dallas. It's 450 units, and we're breaking ground in June. We're very excited about that. Woohoo! So, we're excited. Thank you. I've raised $6.3 million in private equity. So we are just getting started. This project is easy to bring money to because we have a sister property in Austin that we built 240 units on 14 acres. And it sold in 2021 for a profit of $22 million. It was recession-proof with our tenant type of that 30-something tenant who's building their career, probably no kids, but they just always pay rent. You know, that's what we want. I like self-storage, but I don't want to get paid in cereal boxes. And what happens to boat storage? If we have a recession, 50% reduction in occupancy. So we want to stick with recession-proof assets. Now, my first property, we didn't have co-GPs. I did it myself, and it was for 16 doors. I forced 80% vacancy when I was still working as an engineer and using discretionary income. Did the rehab with the guys, so I did a lot of this, and I did a lot of this, pushing the broom, wax on, wax off. So we had a good time with that. Doubled the property value in the first year. I am vetted by Quest IRA to be a trainer for people who have IRAs and want to invest with their Roth or 401k. We do actually have a new property that we haven't told a lot of people about. It's 144 condos in our same area, which is qualified for 1031. We're going to take a couple of ticks. So why, if you're a family office, what is your client's why? Because that's really the main purpose of your conversation. Are they looking to shelter and protect their discretionary funds? What's the most important thing for your client? Do they want to diversify their income, or do they want freedom from their job? And do they have a 201k to put to work? I mean, we saw this in the 80s and 90s when a 401k went to a 201k. We're at the same state. And commercial real estate is actually 50% less risky than the stock market. So here's some of the topics that I go through. I've done a lot of speaking, actually. In Houston in March, I spoke in front of 750 investors. And because of what the syndicators have done to the market, it really breaks my heart how they are stealing people's nest eggs. And you have teams that have 10 co-GPs or 10 general partners with 3 years of experience. Well, my team has 400 years of experience, commercial and construction experience, and I have 20 years of commercial experience. So I've been going around the country and I have been speaking and teaching accredited investors what questions should they be asking? What are some of the common mistakes that passive investors make? Do you have access to the property? Can you ask those pointed questions? Will the speaker take a breath so you can ask what are their the risk mitigation strategies? Can we ask about what are the risks of the speaker? So we've been talking about these things. We've got training. If you would like to know more, you can go to morefreedom.com and you can opt in. But we have 85 or 90 videos on market updates, property updates, and commercial real estate education. Because 2 months ago, we started to see what? Interest rates normalizing. The commercial interest rates. We saw residential interest rates 5 to 6%. They're about 6%, and they'll normalize to 5%. They'll stay that way for a very long time. That is a normal market. So anybody who doesn't understand that hasn't gone through a couple cycles. After 20 years, I've seen a couple cycles, and so we know what a normal interest rate is. 5% for residential, very normal. Feel free, if you have your phone and would like to sign up for our YouTube channel. We do property updates, project updates, market updates, and commercial real estate education. You just search on YouTube for The Prestige at mayhill.com, and it's videos on demand. So who am I? A brief introduction. In 2005, we founded this organization, and I had been working as an engineer. My clients were Lockheed Martin, Northrop Grumman, and some of the generals with the U.S. Army. So we were working on very interesting projects. I was traveling across the U.S. I actually traveled full-time for 3 years as an engineer. I have about 23 years of SAP, too much. But also working with Deloitte & Touche, Ernst & Young, KPMG, Pete Marwick, and used to be the Big Six, so I don't know how many they have now, Big Four. Excellent education, excellent career, and 20 years ago I started to get into commercial real estate. Security clearance at the highest level of the federal government. And I studied for my Series 66 law license under the SEC. Here's a quick snapshot of our team. And I'm sharing this with you because one of the things that we need to understand is, what does a good deal look like versus a mediocre deal? What does a good deal look like versus a stellar deal? And so when I say we have 400 years of commercial and construction experience, I don't have 10 co-GPs. I have one co-GP that I added because he has sales, and I'm an engineer, I'm an introvert. He's a sales guy, he's great at what he does, but he's also an owner in the property. So he's a good amount of skin in the game. We just hired John Goodman, and he has his Series 7 and he has his Series 63 to help with investor relations for high net worth individuals, for accredited investors. Development services, Warren has 30 years plus of working with 2 different city planning departments. Fantastic. So from humble beginnings, this was my first property, Shiloh Apartment Homes. And it was exciting. So we put some lipstick on that page, but we also went around all the showers. We replaced all the bushings in the showers, the tubs. We made all the faucets the same. We put all of the same color of paint into the interiors, and we painted the roofs, and because the roofs were on the siding, and then we painted the outside. So we doubled the property value in the first year. It was an F crime rate, and it was a great success. I've also done REOs, real estate owned properties, including very large shopping centers, and looked at the flips and analysis of millions of square feet in industrial and retail and self-storage. This is one of our properties that we had worked on in Plano, and an industrial portfolio that we analyzed for an owner in California. So a lot of different property types. And multifamily is definitely not my favorite. It's not very logical. It's got a lot of people problems. But you know what? Everybody needs a place to live. And even though it's not a Class A conversion, the professionals need a place to live. The architects, the engineers, the professors, not the students in the universities, it'd be the professors. So everybody needs a place to live, and they're not going to pay $1,000 for rent. Our sister property was a success in 22 North. We only saw rent specials one time during the recession. So that meant all of our tenants were paying rent when the government said, hey, we're going to give you a year not to pay rent. Well, we didn't know that was going to happen. And the Supreme Court told the CDC that what they did was unlawful. Okay, that's great. But we don't want the government in our business. And Congress could create a rent moratorium again. So we want to be very careful about the asset class that we put our time and money into. And Class A luxury multifamily is the best recession-proof asset. These are actuals of our property in 22 North and in Northwest Austin. And when we look at a shortcut to success for passive investment, we want to look at these things. Do you have available to you as a high net worth individual all the financials? Do you have access to conservative bank underwriting? For instance, we don't blue sky anything. So I have a past life as an engineer, and our bank underwriting is very conservative. We have our analysis done at a 5 cap. That's a 5% capitalization rate for a Class A luxury multifamily, which is running at a 3.5 to 4 cap. So we're not going to overvalue our property. That doesn't do anybody any good to overvalue our property. We have risk mitigation. We still have about 5 or 6 risk mitigation points on our analysis. One of them being the inflation rate. So we don't have a 6% or 8% or 20% inflation rate. We have a 5% inflation rate, but we like to use 3%. In our inflation, it does no good to overvalue your property, and I sleep very well at night. Again, some great pictures of 22 North. Some more folks on our team. You probably see Brad Blazer here, capital advisor, architect, engineers, Mike Carrasco, who I've worked with for 17 years, developer. Pre-construction, Kinley Horn is the biggest civil engineer in the state of Texas. And I think we know why multifamily. Everybody needs a place to live. Now, why Texas? Dallas is the number 1 for multifamily construction in the nation, and number 2 for all kinds of construction. Dallas has the highest rents in all of Texas, even over Austin. Dallas has the highest professional paying jobs in the state of Texas, even over Austin. So your time and money are valuable, and we respect that as owners. Okay, we talked about this. So, I have spoken all over. We're teaching about commercial real estate. We do want folks to understand a good deal versus a bad deal, a mediocre deal versus a stellar deal. Some syndicators are having to do capital calls to do a refi. That's not a good deal. So I love the market. It is a great and honest market right now. It's telling the truth. And if you would like to get back with us, just go to morefreedom.com. And thanks for your attention. God bless.
Thank you, DL.
After a lifetime of hard work and dedication, it's time to enjoy the fruits of your labor. As you enter into retirement, securing your nest egg and preserving your financial future becomes paramount. Not only sheltering, but safely multiplying your returns in a hard asset, which does not walk away. You can drive by it anytime. Introducing The Prestige, your trustworthy, vetted partner in commercial real estate investing. We understand that you seek less risk, financial security, and a reliable source of income. With over 400 years of combined experience and proven track records, The Prestige is your beacon of trust. We specialize in providing safe and secure investment opportunities tailored to your retirement goals. We know that you need to rely on experts to navigate the complexities of the market. That's why our team of seasoned experts is here to guide you every step of the way. Our collateral contracts have been approved 10 plus times by Quest IRA, which is under the SEC. Here are just a few of our client testimonials. Wow, DL, this is so exciting. I'm so happy for you and for us. Very exciting. Love the floor plans. We've got our distribution pending in our bank account. Thanks so much, DL. DL, we can set our watch to your distributions. Never missed a payment. Don't compromise on your retirement dreams. Visit The Prestige at mayhill.com today for our current and rare investment opportunities. And let us utilize our 400 plus years of experience to safeguard your nest egg and provide you with a secure investment in a low yield market. We are owner operators with daily hands-on on-site responsibilities. We are not syndicators. DL began in commercial real estate in 2005 and is one of the top seasoned leaders in investing and developing in Southern California and Dallas, Texas. And there is no slowing down. The Prestige, your trusted partner in commercial real estate investing for retirees.